Global markets closed the week searching for direction as elevated oil prices, fading rate cut expectations, and cautious central bank signals limited risk appetite. Comments from U.S. President Donald Trump left the door open for negotiations, creating short-term relief, but the lack of a clear agreement signal from Iran kept geopolitical risk in the pricing, and uncertainty remained in energy markets. Brent crude stayed above the $100 level into the close, showing that higher energy prices continue to create upward pressure on inflation. On the central bank side, the message remained unchanged. Federal Reserve officials stressed that it is too early to cut rates, while the European Central Bank and the Bank of England maintained a cautious stance, reinforcing expectations that global rates will stay higher for longer. This supported the dollar index and kept the U.S. 10-year yield above 4%, and tight financial conditions continued to make it difficult for risk assets to build a strong trend. U.S. indices closed mixed. The S&P 500 and Dow Jones finished slightly positive, while the Nasdaq closed negative due to selling pressure in technology stocks, and below average volume showed that investors remain cautious. In sectors, profit-taking was seen in technology, with Nvidia and AMD under pressure, while data center spending remained strong, suggesting that the long-term story is intact, but short-term pricing is under pressure. Energy stocks moved with oil volatility, while defense stocks remained strong due to geopolitical risk, signaling that the market is not fully back in risk-on mode. Gold remained under pressure during the week, as a strong dollar and higher rate expectations limited upside, showing that liquidity conditions remain tight. This is the key balance in the market. As long as rates stay high, the dollar remains strong, and without a weaker dollar, it is difficult for commodities and risk assets to build a strong trend. Before moving to crypto, it is important to note that crypto is often the first market to react to liquidity changes and risk appetite. In crypto, the picture remains cautious. Bitcoin stabilized around $70,000 into the close, while Ethereum held above $2,000 but failed to attract strong buying. Total crypto market cap stayed flat, trading volume remained limited, and most of the activity was concentrated in Bitcoin and Ethereum, while altcoins continued to show weaker performance. On regulation, uncertainty remains around stablecoin and ETF rules in the United States, and limited ETF flows together with tight liquidity continue to cap upside in crypto markets. And this aligns with the macro picture. As long as rates are high, the dollar is strong, and liquidity is limited, it is difficult for crypto to build a strong trend. From a psychological perspective, this is not a trending market, but a headline-driven market. A similar environment was seen in 2018 when markets moved sideways with high volatility. In such periods, large funds usually prefer to wait, while smaller investors often make mistakes trying to find direction, and low volume together with fast sector rotation are key signs of an indecisive market. Overall, the market still has no clear direction. Oil prices, rate expectations, and geopolitical developments continue to drive sentiment, and unless these factors change, both equities and crypto are likely to remain volatile and cautious. We talk markets, not noise. D&D